Trouble continues in the oil patch. Exxon just posted its biggest quarterly loss in history. And it was even worse over at Chevron, which lost more than $8 billion last quarter. Jared Blikre here with us now for a closer look. Jared, let's pick apart ExxonMobil first. What have you got there?
Well, this was really a disaster quarter from a number of standpoints. The biggest question is going to be, can they maintain their $15 billion a year dividend? And right now that looks a little bit shaky. They have pledged not to take on any additional debt in the near future, but their leverage ratios are just skyrocketing. Edward Jones noting that they pretty much generated zero cash in the second quarter. Instead, they burned about $8 billion of cash in the period. And they're also not making any write-downs. And they're saying, this is Edward Jones still, that at some point they start to lose credibility because we've seen all the other majors like Chevron and Shell, they've written down billions. So going forward, they have the work cut out for them. But one bright spot, they do see improvement in the refining operations, increasing in the third and fourth quarters. In the reported quarter, they were operating at about 30% lower capacity than usual during the second quarter. And they expect that demand for transportation fuels to climb in the second half of the year here. But they say it's going to be really slow for jet fuel. Just taking a look at the stock right now, we can see it's down 2% in the pre-market. Year to date, down 40%. I think that pretty much speaks for itself.
Jared, I was just laughing up a bit. I got a note in my box. Jefferies reiterating their buy rating on Chevron. But it was not a good quarter for Chevron by any stretch of the imagination.
No, absolutely huge revenue miss. They got a dividend too. They're in a little bit better shape than than Exxon, because their balance sheet is not fortress strength. I think it's pretty far from that, but it is on a comparative basis better than Exxon. And in fact, the CEO said, and I quote, "We entered this crisis stronger than others, and we intend to exit it stronger with stronger balance sheet, our dividend being paid, and shareholders confident that the dividend will be sustainable and growing over time." So you can just see how the dividend is just key to these oil majors right now, as it really has been for a long time. And then you compare it with Royal Dutch Shell and Total, which announced their earnings yesterday. They actually were profitable, but that's mainly due to trading. And the U.S. oil majors simply don't trade as much. And when they do trade, it looks like Exxon, for its part, made some bad bets during the quarter. So they probably actually lost on their derivatives trading.
All right, Jared, thanks for the oil roundup.